Times today, we learned that mortgage applications surged last week, up 27% versus the week before. The huge decline in long-term interest rates led to a wave of refinancing attempts. Hey, that's what happens when people get worried about a slowing economy. Bond yields come down, lending gets less expensive, and then we get a surge in new borrowing. So could the housing market be ready to start making a comeback? I think it's worth digging deeper here, which is why we want to check in with one of my absolute favorite companies, the largest mortgage lender in America, the privately held Quicken Loans. Let's take a closer look with Jay Farner. He's the CEO of Quicken Loans to get a better sense of what's happening in the mortgage market and in his own company. Mr. Farner, welcome to Mad Money.
Absolutely, Jay.
Good to see you, Jay. Have a seat. Good to see you. Before we get started, I just wanted to ask, one of my heroes is a fellow Dan Gilbert.
Sure, yeah.
And not just because of all the things he's done with sports teams, that's nice.
Yeah.
But of the rebuild of Detroit, of which he probably, I think, is pretty much single-handedly doing it. How's his health?
Well, as you know, he suffered from a stroke here just about a week and a half ago or so, but he's on the road to recovery. And if there's a guy out there that's got the passion and energy to accelerate whatever timelines they're giving him, I'm sure it's Dan. So we're all rooting for him and thinking about it.
You wish him good luck. He's
Absolutely.
a special man.
I'll tell him for sure.
And, you know, I know Detroit wouldn't be on the comeback, which everyone tells me. My wife is saying, we should get a house in Detroit. You know, there's this guy. I said, the guy is this guy, Dan Gilbert.
Yeah. Well, we'd love to have you. I'm happy to help you with a mortgage, too. So.
Well, there you go. I like that enthusiasm for the product. Let me ask you about mortgages. I do want people to understand that while there may be gloom that causes rates to come down, there are some people obviously ringing the phone off the hook right now.
Yeah, I mean, as you said, mortgage applications are up big time. It's been going for a while now. I think the awareness level is up.
Right.
And we're having record months. This quarter will be the largest quarter in the company's history.
Really?
I think June will be the biggest month we've ever had. And it's both on the purchase side and the refinance side.
No, but that's huge.
So
You're the largest.
Huge. We are the largest. We're getting larger. The most important thing is, while we do it, the turn times are remaining low. The client service remains good. I think that's the critical piece, right? We've got to take care of every client no matter how many loans we're doing.
All right, well, look, first of all, I should have started by saying, listen, I owe you and Dan an apology, like many people, but that's no excuse because I try to do as much homework as I can. I was under the impression from some brick and mortar bankers that you were doing things that were not as good in lending as they did. And then Dan sent me the facts, the actual statistics. You're a much better lender. I'm just going to say it, and I feel bad, and I apologize to you personally. Tell me how you do it, because a lot of people say, oh, not deposit bank, you know, I don't know, or just quick and too quick, and that kind of thing.
Well, I think it's important to understand that there's probably not a connection between an FDIC-insured deposit and the quality of mortgage that you write. So for us, it's about technology, it's about people, it's about the client. And and I think Dan sent you, when you look at our compare ratios, how our loans perform, they're top notch.
I was mortified that I was so wrong.
Well, I appreciate that, and it's also kind of our culture, right? You know, I've been at the company 24 years. Right. We're a 34-year-old company. We care about where we're at in Detroit. We care about our team members, and so we're always thinking big picture, long term. Are we doing the right things to make the best decisions? Lend to the right people. I think that's important too, Jim. Sometimes I wonder, we've got Fannie, Freddie, FHA, they set these mortgage guidelines, and it's our responsibility to follow those guidelines properly.
But even though you're not a brick and mortar, you're not under-regulated. That's another rap that they told me.
You know, we've got the states regulating us, we've got the CFPB regulating us, and we've got to follow all that regulation, but we also got to make sure that, you know, the police officer in your community, the school teacher in your community, we've got to make sure they get those loans. And so it's doing everything properly and right, and also reaching out to everybody that deserves to get financing here in the country.
So what's the relationship between this low unemployment rate and the default rate for you? What are you seeing?
Well, I think any time that we've got unemployment rate so low, defaults are going to be less, and that's a beautiful thing. It's also important that you take this time and invest in your servicing platform, because it won't always be this way. So are you making the right technology investments, people investments, so as we see defaults tick up, even on the best portfolios, you're ready to handle them properly, which means taking care of the client first.
Now, other people say to me, Jim, I know you've become enamored of these. You like this guy Gilbert, but, you know, the Quicken Loans, they do no-doc loans. I say that's just completely untrue.
Yeah, absolutely. As you probably know, we kind of sidestepped the crisis a decade and a half ago or so as we really focused on conforming conventional loans. And that allowed us to to make then the investment in technology coming out of the recession that I think others weren't able to do, and gave us this ability to now be the largest lender in the country. And so we stay on that path, right? We're thinking about the quality of our loan. As a servicer, one of the largest in the country, we're actually, we can watch how our loans are performing, and that guides us in every decision that we're making.
I'm acutely aware that whatever rules you do follow could be tightened if a Democrat wins the White House. Senator Warren. Senator Warren's not really a friend of the bank. No, I've known Senator Warren. There's levels of reasonability, by the way, that I think you and I both know could be occurring. But does someone in your position have to be concerned that we could re-regulate again if we have some of the Democrats who are running now in the White House?
Well, look, I think regulation focused the right way is important. What you know this better than anybody. When you change regulation, the impact it has on a business, right? It just doesn't happen. All docs have to be changed. Technology. So what a business does is it takes all the people that could be working on innovating and helping clients. They redirect that attention to getting and working on the new regulation. And
right.
So it really better be great regulation that's the right step forward for the housing market, whoever's thinking about it, Republican or Democrat. The shame is when we just re-regulate for the sake of doing it, and it actually hurts the consumer because now you're focusing your efforts on something else besides developing great products for them.
No, that's totally true, and I wish people understood that we want people face-to-face with as many customers as they can.
Yeah.
I think that things are fine in the country, that's what I've been saying, but some people feel that things have really deteriorated because of the trade war. Do you feel okay about no rate cut next week? Do you want to wait? What's your temperature? Because if you're doing all that business, I don't know.
It's a great question. So probably two things. I've been telling people the last few days, the uncertainty around what really is going to happen with interest rates is probably at a high that we haven't seen in a while, because words and tweets and things of that nature can really change the direction. I think we're both surprised of the talk of 2 rate cuts coming here, right?
It's just not, it doesn't hold water.
And when you see what's happening on Main Street, the clients we're talking to, it feels like the economy is still very, very strong. So we think about a scalable platform. A lot of lenders will sometimes really ramp up when rates tick down. And then I always worry, well, what happens when rates tick up? We're more focused on the long haul. When we have our team members at our company, we want those team members. That's the most valuable resource. We need them here for the long haul. So we don't really play that cyclical game like other lenders do.
Then you don't. Well, once again, best wishes to Dan.
Thank you.
You are welcome on the show anytime. You are a delightful guest. That is Jay Farner. He's the CEO of Quicken Loans, with, I think, a lot of good things to say. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.